The S&P 500 has broken out of a 385-day resistance. We're going to be discussing what this means for Bitcoin and the broader cryptocurrency markets. Let's get into it. Okay guys, welcome back to the channel. Thank you for tuning in. We're going to go ahead and take a look at the broader markets today, as well as Bitcoin. As you heard from the intro, the S&P 500 has officially broken up from a 385-day resistance. Absolutely massive move over here, guys. We're going to be talking about what this means, where it can go, and how it can impact Bitcoin. Of course, running a short-term and macro technical analysis on Bitcoin today as well. Before we do get into it, smash the like button, hit the comment button, subscribe to the channel, and sign up to Bitget to support the channel. Obviously, more information on that later. You can also join our Telegram channel for free. That will be our free Telegram channel, the second link down below. Updates, analysis, information, videos, news events, educational posts, charts, and more over here. If you're interested in our VIP channel, you get access to all of our updates, analysis, trade signals, all that kind of good stuff, entries, targets, stop losses, over 520 members, guys. And we do have our VIP group chat with all our members in there daily, asking questions, learning, educational resource, trades, and so much more. Let's get into it. So we'll start with the market data, guys, and 39.61% for January, absolutely huge. I actually went through earlier and I actually circled all of the months that we've had a greater than 39.61% move, and it came out to be about 8. So out of the entirety of Bitcoin, excluding 2013, we've only seen 8 months over 39.61%. So absolutely massive month of Bitcoin. You would think we're in a bull market with this kind of month. You would genuinely think that we're in a bull market with the kind of movement we've seen in January 2023. We are not yet in a bull market, but it's absolutely phenomenal to see such a bullish reaction in the markets. 39.61% is huge. Volume for 24 hours is 6.7% up. It's sitting around 85 billion. You can see it on the top left-hand corner of the screen over here. You can also see our liquidations are down around 17%, and that's expected. We are seeing more consolidation, some sideways movement in that range currently at around $100 million in liquidations. Moving on, volatility is at 2.14% for the 30-day period, and again, we do expect that to continue up over the next few days, and short-long ratios are very, very even. So we do have tight consolidation, we have indecision in the markets represented by what we've seen over our 4-hour close candles. Even on our smaller time frame, we're seeing indecision, and even on our 1-day chart, we're seeing indecision. Look at these candles over here, okay, 1-day chart. We've had a fair bit of indecision in the last few days. Obviously, in the last day and a half to 2 days, we're starting to see that move upwards slowly, which again is expected. We are in a resistance range. This resistance range does span quite a fair amount of ground over here, and therefore, like we said already, we could theoretically push up into this higher end of the range before we reject and come back down. It's very, very possible to see that, okay? So let's go ahead and jump into the broader markets. We'll come back to Bitcoin. So the DXY is continuing down. We did actually push down to 101.5 yesterday. We did jump up a little bit again. We broke out of what we had a small pennant formation. We did actually have that pennant formation, remember guys? We had that downward trending resistance over here, the upward trending resistance. We had actually broken upwards, downwards, and it looks like we're moving back towards the downside now. A lot of fake outs on either side, again representing indecision in the markets, and we are going to be continuing down to 101.3. Again, 101.3 is going to be a major trigger level. Be definitely keeping your eyes on that. Breaking through 101.3 was going to be a pretty significant level for the DXY, because breaking through that level will most likely propel the S&P 500 through one of the upper resistance levels, one of the local highs, again giving that confirmation of an actual reversal in the markets for the traditional markets, and therefore more likely Bitcoin to continue upwards. Looking at the Dow Jones, very similar spot over here. Nothing too interesting happening on the Dow Jones in comparison to the S&P 500. I would say it's quite boring right now. We do need to see this dotted line break and these local highs break around 34,000, and more importantly 35,000 clear to get that breakout up to 36. Until then, we are still very much in a bit of a risk to see a rejection. Looking at the S&P 500, this is where it gets interesting. The daily candle has officially broken above our downward trending resistance, of course, our 385-day resistance. This is our first ever daily close above. We would like to see a daily open and close above, so this daily candle is going to be very important. Looking at the larger time frame, such as the weekly chart, we can currently see the weekly candle is kind of sitting just above it, and on it we got 3 days and 20 hours on the close. It's going to be very important. So I'd really like to see a weekly break and close above this 385-day resistance to get confirmation. So within the next 3 days, we're going to either get confirmation of a breakout here, or we're going to get confirmation of a fake out, and of course the markets will respond due to how that actually ends up being, whether it be a fake out, whether it be a breakout. What I'd also be looking for, like I said in yesterday's video, is not only just a break of this trend line, but we'd really like to see a clear of these local highs. So around 4,100 to 4,110 is the level I'll be looking at. Not only breaking out of this trend line, but also breaking above its local highs. That will be an added point of confirmation for a run up to 4,300. And of course, there'll be no doubt in anyone's mind, by that point, we're definitely in a macro uptrend for the market, so Bitcoin would have continued to push higher, hopefully through that upper resistance if this move actually does play out. Okay, looking at bond yields, this is very interesting. Again, something I have been looking at for the last couple of weeks now. If you've been following the channel, actually a little bit longer than the last 2 weeks, for about 2 months now. They have been showing us signs of reversals. We are holding on to this 50 EMA on the 3-day chart on the 10-year government bonds, but more importantly, the 2-year government bonds are in a falling wedge structure. Now you would know, as bond yields go up, it is bullish for the dollar. It is bearish for the stock market, okay? If it's bearish for the stock market, we're likely to see Bitcoin move downwards. Now the reason being, okay, I'm going to go on a little bit of tangent over here. The reason being is because stocks and crypto, excuse all these charts over here, we're going to go up to this top one, are correlated by a degree of 70%. Okay, there's a 70% correlation between stocks, this is stocks over here, S, and crypto over here. Okay, you can see the risk and return of these investments are slightly different. So return on investment is greater on crypto, meaning it moves more volatile, as there is a greater risk on the investment as well. Okay, risk represented by our beta over here. Now you can see the beta on stocks is considerably lower than the beta on the crypto, and therefore the return on crypto is considerably higher than the return on stocks. And that's why we generally label crypto as a more volatile asset. It generally moves more when we get into uptrends, and it generally moves more down when we get into downtrends, as we have seen over the bear market and prior bull markets. Now, what influences the movements of these assets? This over here is systematic risk. So when we're seeing systematic risk shift downwards or lower, we see an increase in the risk return ratio for crypto and stocks, and therefore they're more likely to rise upwards. And that is the exact process we've been seeing. We've been seeing inflation rates drop. We've been seeing interest rates, the rate of the hikes decrease. It hasn't pivoted yet, but we're coming close to it, okay? It's decreasing. And obviously other things that can influence systematic risk, monetary policies, taxation policies, which haven't actually changed. But we have seen those things shift, okay, more favorably. The market environment is getting more favorable. The perceived systematic risk is getting more favorable, and therefore the market is increasing. So as we see the DXY continue down, the strength of the dollar decreases. The reason the strength of the dollar decreases is because inflation starts to decrease, okay, which tells us interest rates are doing their job, okay, and that allows systematic risk to decrease in the market, and therefore it allows cryptocurrency and stocks to have a better, more favorable risk return, a decreasing beta, okay, decreasing risk, and therefore we get this bullish momentum and price action occur in the markets, okay? As we approach resistance and supports, we do run into some barriers in this process, which we've already mentioned, okay? That is kind of the essence of how it all works from a mathematical standpoint. So moving on to Bitcoin, what is happening on Bitcoin on the larger time frame? There's a few things I want to talk about, and one of the charts I've been looking at, and I've been kind of seeing all over the place lately, Twitter, you know, even a little bit on Telegram. I've seen a lot of people on YouTube talk about it. Not that I watch YouTube much, but it's this chart over here. It's this log scale chart, downward descending resistance. I've seen people draw it so that the resistance is actually still intact, but I'd like to say the resistance had been broken. The log scale resistance had been broken. Now I do want to say this. What is more important, a log scale resistance or a horizontal resistance range? A horizontal resistance range is going to be considerably more important than a log scale resistance. So just because we're broken out of a diagonal log scale resistance, it doesn't invalidate the fact that we are still in a horizontal resistance range. Right now, the horizontal resistance range is more significant than a diagonal resistance that we've just broken out of. okay? So keep that in mind. The log scale resistance over here is less significant than the current resistance range we are testing, and therefore there's no need to look at it too much, because what is reality, the reality is, we are still within this resistance range, regardless of whether or not we've broken out of a log scale resistance or not. So we are keeping an eye on this resistance range. Like we said already, guys, the stock market going up is going to give Bitcoin a kick. They are 70% correlated. So as the stock market rises, as it's broken out of that resistance, and if it does get that weekly close, Bitcoin is more likely to push through this resistance. That is what it means. If the stock market goes up, Bitcoin is more likely to also push through the current resistance. If it rejects, it is more likely to also reject. The reason I say more likely is because it is not perfectly correlated. There is still a 30% chance they do act against each other and do not move in the same direction. And therefore, we can see the stock market rise and Bitcoin still reject, and we can see the stock market reject and Bitcoin still rise. We can also see the stock market move sideways and Bitcoin rally, like we have seen in the last 2 or 3 weeks, okay? So there is a small discrepancy between how the price moves. Sometimes there are not perfect correlation. So let's talk about Bitcoin on the macro chart. And more importantly, guys, let's do a technical analysis. Let's talk about how the trend is looking, and then we'll go do our short-term analysis and talk about what is happening on the short-term price action and how the short-term price action is developed and how it is looking. So looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. I want to talk about the Gaussian channel, because this is a chart we looked at quite some time ago, particularly on the monthly chart. We looked at the Gaussian channel and we talked about how the Gaussian channel was coming down to retest what was a very significant level on the chart, which was that midline of the Gaussian channel. In fact, we closed the candle just below the midline. And as you would know already, every single time we close a candle below the midline, we generally move towards the downside. In this instance, we closed the candle below the midline, but we got a significant push upwards directly right after. There's a few reasons why. Number one, structures outweigh technical indicators. I'll say it again. Structures outweigh technical indicators. The reason why this was probable and it actually played out is because although we pushed down below the midline, which is an average price, it's a moving average price, we were in a bullish structure while that occurred, okay? We were in a falling wedge structure while that occurred. So the breakout of the falling wedge pushed the price back above that level on the chart, and again, invalidated that breakout down below, and therefore the risk of that monthly close below on the Gaussian channel is no longer a risk we're facing. We are currently above it. We are no longer worried about that. I will, however, say we would like to see a break above the upper band on the Gaussian channel to see a macro uptrend develop. And this goes without saying, guys. Where does that level end? 27,400. If we move forward a few weeks, it is likely going to push up to 28,000 to that $30,000 level, which again lines up with that 28,000 to 30,000 horizontal resistance we have right over here, represented by the yearly low, and more importantly, the yearly low on the 4-year cycle, as per what we have seen on prior cycles, okay? Breaking through a monthly candle level results in a macro bull market uptrend. Breaking through a monthly candle results in that macro bull market uptrend starting. So from a Gaussian channel perspective, I did have a lot of people ask me, what about the monthly Gaussian channel? There's an update on the Gaussian channel. We are actually seeing that bearish signal that was flashed a few weeks ago invalidated. It's deleted, it's invalidated as the structure has broken upwards, and therefore the structure is more important, it holds more significance. So what the price action is actually doing is more significant than what an average, moving average or technical indicator is showing us. So keep that in mind, guys. The price action is always more significant than what a technical indicator is saying. Same goes for resistance levels. Horizontal resistance ranges and levels are always more significant than what a technical indicator is telling you, okay? Price action tells where the price is going. Technical indicators represents the strength of the trend. If the strength of a trend is weak, it doesn't mean the price can't go up if there's a bullish structure. It just means currently within this consolidation is very, very bearish, and it's very likely, it's very explanatory as we have a downtrend for 6 months. Decreasing volume, decreasing volatility, decreasing price action in this tighter consolidation. It is expected that indicators start to get more bearish, and people's targets go lower and lower, when in reality it is a bullish consolidation, and as soon as volatility kicks in, we get an explosive move like we said. This is exactly what we saw at the top side, guys. Exactly what we saw at the top. Same thing, we saw excessive uptrend occur. Uptrend was getting stronger and stronger and stronger. The technical indicators, again, based on averages, we've had a massive long uptrend. The technical indicators are getting more bullish, more bullish, more bullish. They are lagging, of course. The structures suggest a bearish break. Okay, this is a rising wedge formation over here. We broke downwards, and only after we broke downwards, these indicators, which were massively bullish, started turning bearish. And guess what? The people making predictions based on what the indicators were doing up here were the ones calling for 100K, were the ones calling for 200K. Same thing at the bottom, guys. The people in making predictions based on the indicators are saying over here were the ones calling for 10K, 3K, 6K, okay? Structures are always going to be more significant when determining reversals, when determining price directions. We use technical indicators to determine the likelihood of continuations throughout current reversals or throughout current trends. For example, a swing upwards. What is the likelihood of a continuation from this range over here upwards into this range whilst this move is continuing? That is what we use. What is the likelihood this breakout of the descending wedge is going to result in a continuation or a rejection? That is what we use technical indicators for, okay? That's exactly what we use the RSI on the weekly for. That is exactly what we use the MACD on the 14-day chart for, to predict that kind of stuff. That's what we use the VRPV. Very straightforward stuff, guys. Keep it in mind. Let's go ahead and run some more technical indicators really quickly. I want to take a look at the Ichimoku cloud, and then we'll go to a smaller time frame. So the Ichimoku cloud on the daily chart, we've actually seen a breakout on the daily chart. We saw a breakout of the clouds. We saw a breakout of the conversion and baseline. It is looking good. We also have our lagging span, which is this light green line above the clouds, indicating a shift in positive momentum. So the momentum is definitely positive. Again, this is no surprise, as the weekly RSI does suggest that, and all of our smaller time frame moving averages RSI does. We do have the price over the base and gauge lines suggesting strength in the trend. Moving to a larger time frame, a 3-day chart, we can see we're running into a little bit of problem over here. The price is currently touching the upper band of our cloud, our red cloud, okay? Now you would know, if you know anything about trading on the Ichimoku cloud, you would know that when the price is within the clouds, we are generally in resistance or a no trade zone, meaning that taking this into consideration, we have the price within the clouds, which is a resistance. We have the price within a horizontal resistance as well. This is indicating this area is strong resistance. Now you would know, if the price breaks through strong resistance, it becomes strong support. If we have consolidation within strong resistance and then the price is able to break through it, we generally have a surge of volatility which propels the price even higher. Now, if we do reject from that level, we have the exact opposite occur. We have increasing volatility, but with the bearish momentum following the rejection, we have a strong move downward. So keep your eyes on this range, guys, is very important. Bringing up the VRPV, we can show you guys this area is a strong area of resistance. And the reason it is, we can look at the VRPV. We have a significant jump up in resistance over here that immediately drops off after we push through around 23,400. And more importantly, guys, it drops off even more above 25,000, okay? So we currently do have an immediate level of resistance right over here. 23,000, what is it? 23,400, okay? that is immediate resistance. After we break through that level, we've pushed through the majority of the chunk of resistance within this resistance range. So if you can break this resistance range up to, divisions where you have stronger resistance and lighter resistance above, that is kind of what we have. We have the majority of our resistance within this resistance range between 22,600 and 23,400. Above that level, we have decreasing resistance, and it will become easier and easier for the price to build momentum and push through. It doesn't mean it will, it just suggests it will become easier. And that continues, that same trend continues to 25K, where we have a significant drop in volatility volume, and we should have that spike in price, okay? So keep your eyes on a level in the short term. The VRPV does suggest that. Let's extrapolate that information to a small time frame. 23,400, let's take that to a smaller time frame. 23,400, where is that on our smaller time frame? 23,400 is sitting right over here. Let's chuck it in. Trying to get it perfect. Okay, 23,000 is right up here. 23,400. So we know that 23,400 is going to be the trigger for a potential increase. As we've just seen on the VRPV on a larger time frame, historical trading does start to decrease after 23,400 up to about 25,000. Okay, that's when it really significantly decreases. So if we're going to reject, guys, the likely place for rejection is going to occur before 23,400. If we start pushing through that, we will most likely start to see more bullish momentum. Now, we could definitely see a liquidity spike into our range and continuation down. Again, as we remain in resistance range, we do have to be aware the possibility of rejection is likely. And I know I've been saying this for days now, that we're going to reject. I haven't said we're going to reject. I said the likelihood that rejection will take place within this resistance range is quite high. It's quite high. It's quite a high probability we're going to reject. However, Bitcoin is definitely showing some strength, and we do need to identify the points of invalidation of that rejection, as we already have. Okay, the likelihood that we do reject before 23,400 is greater than the probability that we reject after 23,400 to 25,000. Okay, the next major resistance above 23,400 is of course going to be $25,000. Okay, so the distance between this range over here is going to be considerably easier to move through than the distance between this trend line here and this trend line here. A lot more resistance here than there is here, and that is why we're seeing sideways consolidation. That is why we're starting to see liquidations plateau. That is why we're starting to see longs and short ratios even out. There's indecision, there's consolidation, there's compression, and there's decreasing volatility, and therefore the next move is going to be quick and aggressive when it does occur. We just need to wait for the trigger. As we said already, the trigger for a move down is of course losing this lower trend line. Losing 22,530, this local low over here, will result in a continuation back down, 21,500, 20,800, 20,100, and potentially even lower, although I think very unlikely we go down this low. I think the lowest will probably go around 19,200 to retest that POC level on the weekly chart. If we do push upwards, we could again push upwards all the way to 25,000, or we could reject anywhere between this level at any point. So we do have to keep that in mind. Okay, guys? I'm going to leave the video, guys. If you've got any questions, leave them down below. The video is getting quite long. I do want to quickly go ahead and talk about the Crypto Academy. If you're interested in learning how to trade like I do and learning how to analyze charts like I do, from a macro perspective, short-term perspective, a structural perspective, a analytical and technical perspective, we do teach all of this, guys, in our 10-unit Crypto Academy course. It has been hand designed by myself and Wolves of Crypto. We've put absolutely everything we think is essential to give you guys the absolute basis, building blocks and essentials to create strategies, analyze charts, fundamentally analyze coins, and so much more, guys. Everything is there for your disposal to become a better trader. Now, if you're interested, go ahead and contact the email down below for more information. We'll send you the entire package of what it is actually included, how the course is run, and all the information is there for you guys to make up your decision. With that being said, I'll catch you guys tomorrow. Cheers.